And I think the last question to answer on this piece is why leasing. You need to be in a sector that is obviously growing. We fundamentally believe that leasing as an asset class is going to transform in the next 5 to 10 years. Sometimes we don't even know how much we are leasing or how dependent we are on it. Each of our consumer behavior at our ends is changed fundamentally by companies like Netflix or Uber. Each time you take a car, you're entering into a micro lease transaction. Each time you subscribe to Netflix or watch content on Netflix, you're into a micro lease transaction. Even the fact that you're using Zoom to do this call is a micro lease, right? We are paying a subscription charge to Zoom to facilitate this transaction without having to incur any capex at all. The same thing is true for companies. Companies are increasingly moving to asset light business models, which means that they do not want to own the asset. They only want to subscribe to the service. I think, I love giving this example. If you think of Amazon Web Services, many of you may be using it in your companies. It's a cloud hosting platform. It's a cloud platform. Amazon requires tremendous amount of warehouse space, servers, cooling stations, racks to host these servers on which they build the cloud. But in reality, that is nothing that Amazon needs to own. They are all commoditized assets. Why can't there be a company that leases those assets to Amazon, right? And Amazon simply procures them. As a company, you are subscribing to Amazon Web Services and not having to build any servers of your own. We are seeing this play out again and again and again across industries, especially in sectors like mobility and electronics. And that is where we are focusing on. And that is why we're focusing on leasing, because the opportunity for us is just getting started and there will be more and more interesting business to do. The last point here is that all the assets that we're talking about are revenue generating assets, right? And that is a very critical distinction. If we were to lease you office, if you were in a financial services company or an IT services company, and we were to lease you office furniture, it's not really core to your business, right? Which means two things. One, if it is not making money for you, you're unlikely to pay a high cost for it. You want to minimize the cost for it. And second is, if it is not making money for you, you are unlikely to take a great deal of care for it. All the assets that we are leasing are revenue generating assets for these companies. And hence they're happy to pay more because their returns are higher, and they take an extra degree of care because it makes money for them. And that's our focus. Revenue generating assets leased to companies. We also wanted to lay out where we are from a portfolio perspective. All this information is available on our website in a disaggregated manner. You can see the asset page. But just to contextualize where we are, we've been 9 months into our journey and where we are from a numbers perspective. We're fortunate to have 1,200 unique users who have invested for the first time or at least once on the platform. In total, they have invested 22 crore rupees, and that 22 crores has gone to purchase assets and then lease them out. On an overall basis, this has generated a 20% plus pre-tax IRR, and we are yet to see any kind of default or delay in the payments. We've also split the portfolio for you in a couple of ways. 50% or 51% of our portfolio is mobility companies, 28% is mobility assets, electronics is 28%, and furniture is 21%. We've also split it by the nature of the business of our leases. 60% is B2B, and 40% is B2B. We continue to focus more and more on the B2B segment because we believe it adds adds lower risk, higher credit profile, and more surety of payments. And that will continue to be our focus. These are some of the logos that we have worked with. The top one is the logos of the companies that we have leased to. The second row is the assets that are leased. And the last one is the equity investors in the companies that we have leased to. We follow a very strict criteria of only leasing to companies who have existing institutional investors. And we're very proud to say that some of the largest and most well-known investors are equity participants in our company. In fact, some of our companies have gone on to raise capital after our lease transactions, significantly reducing the credit risk that is to that portfolio and showcasing the fact that we made the right choice in picking that lease partner. Once again, all of this information is available on our website. This is just to give you a consolidated view.